But come on, they're they may or may not be fully backed. Oh, and nobody knows. Nobody knows. The industry is like in a huge problem. One exchange that has 85% market share, almost like an LTCM moment. Once people know that there's this pain point in the system, they hunt for it and they start hitting it. And the point is to take risk, right? So if I take no risk, I make no money. And where was the risk bad? I don't know. I could have done more analysis of Luna, but then again, I only lost 200 million.
End of intermission. Part 2.
So like there you were at your zenith. Can we talk about like
Talk about
when you play it back now? You're like, oh bugger! Well, how did I? What did you know? What
Okay.
was the? You think why didn't I see that? What was the thing like? To give me some of that drama.
Okay, there were numerous black swans that happened, that some of which were correlated, but some of which were really quite extreme, I thought. So the first one, the catalyst, was Luna. Luna was a protocol that was a decentralized stablecoin, and it had two coins. It had Luna and it had UST, the stablecoin and the collateral coin. And there was a minting process by which basically this thing collapsed, right? We were one of the backers. We didn't participate in the stablecoin, but we did participate in the collateral coin. And this was the first time in history, for crypto anyways, that two coins, both of them, were top 10, and they went to literal zero in a matter of days. And this was an extreme black swan. We thought, first of all, that this would be able to last longer. The initial catalyst for this was they denominated it. Basically, they created a lot of UST supply for other people that were able to then sell it, and it caused a run. So first of all, I didn't think that would happen. Like, I didn't think that. I thought that they would have a slow release so that it wouldn't collapse quickly. Like, who would do that? And then the second thing was, once it started to depeg, there were bailout options that were not that expensive, and there were big stakeholders. The biggest stakeholder being Jump. It's the largest HFT firm in the world that makes billions of dollars in like regular markets, right? They were the largest shareholder or stakeholder in. One of the largest stakeholders in this, and they had previously bailed them out before, by the way, too. So I thought them plus Binance plus some other big stakeholders, surely we can find a way to make sure that there's a release schedule that would eventually lead to like better stability. It didn't happen. A lot of people got completely wiped out. It was $60 billion of market cap, probably 15 billion of which was some form of fund investment or dollars that went into the system, right? A lot of people just made money because the token went up, but probably around $15 billion of which was dollars that went in that then got wiped, right? And or I don't know, it's hard to say exactly the amounts, but I imagine it's a big number. And that led to a credit squeeze. So for me, it was a hit. I put 200 million in. It went up to 600 and then went to zero. So it was a hit, but I was a $4+ billion fund. So like, it wasn't an enormous hit. The hit came when credit got squeezed across the system, and a lot, Bitcoin, Ethereum, all the layer ones started falling by 40, 50% each. And all the lenders started recalling. Again, not a huge problem. We returned everyone that recalled during that period. It took a month before we, had to file for liquidation. But all of the spreads started blowing out too. So I talked about Grayscale. Well, that went from like a 20% discount to like a 40% discount, right? And another trade we did was called Staked Ethereum. This again, it starts to depeg. It's supposed to trade at par. It trades close to like 80 cents or below, almost, and people are talking about it going to 70 cents. And the reality is it's almost like an LTCM moment. Once people know that there's this pain point in the system, they hunt for it and they start hitting it. And for me, it was okay. Still at that point, it took down other firms. Celsius went down around this time. We now know that FTX Alameda went very negative around this time. So there were other firms that had huge problems. We were hurt, but we were still alive. For us, the final killer was after all of these hits. Our final position ended up getting hunted on FTX. They saw there's FTX, the exchange, there's Alameda, the prop trading firm. They share positions. I've got internal chat of a guy bragging about our liquidation level, and sure enough, it gets hit and we get taken out. So, at which point in this could I have done things better? I think there are many things, but the role of a hedge fund is to take risk, right? So if I take no risk, I make no money. And where was the risk bad? I don't know. I could have done more analysis of Luna, but then again, I only lost 200 million of the initial capital on Luna, so that wasn't even like the big thing, right? I could have done controlled more spread risk.
No, I mean, Kyle, it was the big thing, like because so there's some of the terminology, like we were a hedge fund, kind of like I still don't. You weren't a hedge fund,
No, prop trading firm.
Hedge funds have investors, right? And you have to report to them, and you have to tell them all your confessions, and when you mess things up, and it can be very humbling. And you just had, we're here to make money. It's like
we're a prop trading firm.
No.
We're a partner fund. That partner fund's the right way to say it. Yeah,
prop trading firm, but.
Yeah.
But there might be prop traders that heard you say something which was, forgive me, but preposterous. There are no extraordinary black swans, right? Black swans are extraordinary, right? Per se, right? And black swans just almost never happen, right? It's a terribly overused term, okay?
Sure.
And so where you were, right? The market it hadn't existed for no more than 10 years or so, right? And especially with the new variations, they're fantastically new. There's no observation set, right? Everything is risk. Everything is risk. And then if you were kind of a historian of market psychology, bubbles, I mean, everything you described with collateral all happened in between 2004, 2007 with lending to US houses. Like initially it's like, I'm a bank. I need you to give me 20% just to secure this thing. I need you to have a good job, etc. And by the end, the bank's just pleading with you, please just take the money. Like, but I'm a drug addict, just take the money. But I'm getting divorced, just take the money. That. So, and that was only 2006. Okay, and then if you wanted to go back to source origins, we were creating banks, 100, 200, 300 years ago, and they would have runs. They would have their own coinage, and that it would get reset to zero. So, the big thing was the Luna, and it wasn't huge, but it should have been the kind of, okay, I'm waking up. Like, let's take risks down, and instead you went, we're okay, and actually, hey, look, we're risk takers. There was never the point where you said we got to fold the tent down and just hold the just get out of Dodge City for a while, take a vacation.
You're right. You're absolutely right. If we were better studies, if we had zoomed out all the way and saw that this was if we saw that this was a credit cycle and that this was the bursting of a credit cycle, then it doesn't even matter if the final thing was the FTX fraud. So for him, I mean, he took client deposits, right? From the exchange to the prop trading firm, he was insider trading against them. He was printing money. He didn't even have the coins a lot of the time. He would just print them and then short them, like into people's liquidations or whatever. So to the extent of that fraud, I mean, to me, it sounds like a black swan, but frankly, I agree with you. If we zoomed out to multiple cycles, then you would see this was a credit bubble. Credit bubbles, when they pop, you see who's swimming naked, right? And surely there's going to be like one or two frauds in there. That the fact that it happened to be FTX, yeah, that was a big one. I mean, he was up there on stage with Tony Blair and Bill Clinton. He had all the celebrities. He was renaming these stadiums. Like, it was a big one. But there were also big ones. I mean, Enron was also a big one, and there were big ones in 2008 too, right? So, yeah, if we had zoomed out far enough and been cynics, which I think probably a good risk manager is, cynics about what was happening, we probably could have said, prepare for your counterparties to do this, and then yeah, maybe we would have come to different conclusions.
Yeah, you needed some Buddhism. You just believed that you believed in the permanency of now, which was
You're right.
a calculated error.
That was the first book I read. When everything fell apart, mentally I was in shambles, and I read Hermann Hesse's Siddhartha. That was the first book, and then I went through some others as well. But it was, yeah, I needed a regrounding, because it was a very painful process. I'm laughing now, but it was not a laughing matter then. It was extremely painful.
I mean, yeah.
Yeah.
I mean, one must give mention to the fact that there's a lot of people not laughing, and like you mentioned other prominent people in the space and what have you. But obviously you're tarred with that brush as well. Like, how do you? I mean, like, your situation's kind of hot. People are kind of, I'm sure, using not very nice terms about you. So, like, how do you square? Where So, because like, for you, it's almost like a victim. You did not say this. I just invented this. A victimless crime. Okay.
Maybe I can say the way I think about it, at least.
Yeah. That might help.
So we're a hedge fund. Like, we're actually, we coined the term super cycle. My partner Su Zhu, he coined the term super cycle, that became super cycle. The whole concept being that we had hit mass adoption, and in mass adoption, yes, it's kind of like the tech bubble in 2003. The bubble in 2001, a lot of, like, pets.com being worth billions, but then by 2003, there's a reckoning, and you have 30% pullbacks in the market, sure, but because there's some usage and adoption, that this would then continue, right? And as it did in tech. And we were very vocal and believed that this was the case now in crypto. We had the 2017 bubble, ICO, fluff, and now people were actually starting to use the blockchain. There was decentralized finance, there was NFT usage, there was actual usage, right? And so basically, we're a hedge fund. We're paid to take risk. People know what we're doing, and we were always aligned. Like, my family lost the most in this, followed by Sue's, followed by our creditor list. I should say, we never face retail. We only face institutions. There's about 27 creditors or something like that. So yeah, it's not a good situation. It's hard for a lot of people. If I contextualize it in the market, there are other firms out there that did borrow from retail and probably didn't make the right disclosures to them, did take aggressive risk management. And we've had 6 months since our liquidation. We have no regulatory action anywhere in the world. There are others that have had liquidations in the past couple of weeks that have lawsuits already and regulatory actions already, right? Even potential criminal stuff in the case of FTX, right? So yeah, I think
you haven't had that. Okay,
yeah.
Like, great, but you could say you've just had a 6-month grace period. I mean, I imagine you're still uncomfortable, like,
I feel okay right now. I
can't imagine you're going to go and rent a nice apartment in Venice Beach in California.
I'm not gonna be flashy. I agree with that. I also don't have a lot of money. I lost all my money in the fund. But for me, basically, okay. we're in a rebuilding phase right now. I'm not entirely sure what we're going to do next, but we're in a rebuilding phase, and I agree. We definitely want to
When you
make sure
say
that
we,
other
who's-
people can rebuild.
Who's we? The system?
No. Me and Sue, my business partner. We're plan to keep working together.
Yeah, but, I mean, come on. I mean, you don't come back from that. I mean, I don't mean that to be ungracious, but the future for you is the movie rights and and telling the story.
You'd be surprised. We have potential backers lined up, but yeah, I think people actually kind of get the story. Actually, for us, there will certainly also be the series and movies kind of things. I don't know if it's going to be even about us. I had a couple of big production companies reach out around the time that we were blowing up, but now that FTX is blown up, I think I'm a footnote in these things, frankly.
Yeah.
But yeah, I mean, for us, there definitely is actually. Yeah, it's just a question of I ran the firm for 10 years, right? Like made like 4,000 times my money. So yeah, there definitely is, but it's just a question of what we want to do and how we want to do it. Because yeah, I mean, I want to make sure that whatever my next thing is, it's another 10 years at least, right? It's not and there's definitely no leverage. So yeah, it'll be something as we figure it out.
But like because you do overuse the term hedge fund. I mean, a hedge fund, yeah, and a manager of it
Yep.
loves the engagement with the risk and the return, and your number one objective is to be able to do it tomorrow and next year and the year after, and that desire
Yep.
kind of does filter back to affect your behavior. And that's kind of, again, that's where you got lost in the moment, whereby presently there is no tomorrow. I find that, I mean, it's almost an even bigger story that there are still people in the system that want to fund you again. I mean, I mean, and again, I don't mean
Yeah, I mean, John Merriweather got funded 2 more times, right? Like blew up in 2008, got funded again, blew up again. I mean, from Credit Suisse, there's one of the best traders in Asia. He gets funded 3 times. Like they're playing. It's not a question about funding. It's more a question about what we want to do, and where the opportunity is. I actually think there's like not a lot of opportunities in crypto right now. One of my guiding principles is trading should be easy. You should be able to explain your ARB very, very simply. Then your alpha should be in, how do I maximize this? And frankly, right now in crypto, there's like not a lot to do. So it's probably a waiting game.
But like there'll be people watching this because I read too much history and whatever, and so I built up a lot of I was immune to the charms of the cycle, of the incredible upcycle in Bitcoin, because like you explained, there was a profound reflexive credit process, and ultimately it proves vulnerable and very rapidly to unwind. And so I just wasn't there. Whereas obviously there's people have a passion for this area, and they'll be shouting at me saying, like these guys just destroyed the dream. I mean, I that's not my charge. I'm still, because again, you are being written up, and then I read things and they seem to be just using the wrong numbers, too many zeros. But in terms of the principal thing for you is that you persuaded others to give you lines of credit, which were collateralized. And then your collateral rapidly shrunk, and when you went to sell it, the liquidity wasn't there, the spreads were blowing out against you, and you're now at a stage where you have that very diminished collateral. This is the fund liquidation has this rump of collateral, and it has liabilities. Can you just like so that I don't read the wrong number in a magazine, like where are those liabilities? Where is that kind of discipline?
So the liabilities are relatively clear. I think they around 2.5 billion, something like that. The assets are not, because those are still fluctuating. They haven't sold all the assets. So we still have an asset book. But yeah, I can't really give a good estimate of that. That's up to the liquidator. They sell them over time, and then their job is to basically sell asset and then distribute to creditors.
Sure. And so, so 2.5 yards,
Yep.
liabilities, and where were you at your peak in terms of how much had the system given?
How much was our
like
so that was the total credit. So the total credit, basically the way it works is you borrow in dollars and then you post various things in terms of collateral, right? So that is the I mean, maybe it was a little bit more at certain periods, but it would have been around that number, right? The assets are the things that move around. And so at our peak, our net assets were well over 4 billion. Yeah, but obviously they crashed, right?
And you're saying that you were recalling that telephone conversation where you got almost a billion in credit.
Yeah.
And
There was-
that would have been almost half your credit provision.
No. So the real number is 650 or something like that million.
Right.
Something like that. So it was not like half. It was material, but it wasn't like half. And it wasn't also that unique. It was we had multiple counterparties that were. I mean, you can see our creditor list. I think this particular one is listed number 3 or number 4. So it wasn't even the biggest one, right? Yeah, basically credit builds up over time, and that's just the way it happened.
Yeah. What do you think they're saying? I mean, yeah. Again, I'm kind of dispassionate. Like you have to deal with the consequences of this decisions you make. You know, if someone lines you
Yeah, of course.
buying a credit and they're not pushing you, then, and if you're not doing anything that is fraudulent, then there's a contract, and that's why you have the liquidation. But what about all these personalities and so the FTX? I mean, there you just sound like, like what you're describing in the charge sheet for him is just how markets operate. LTCM got taken down, by everyone on Wall Street knowing the book and then pushing it, and making.
For him, it's a little bit different. So for him, he has 2 companies, right? He's got the exchange, he's got the market maker, and it's like if you're playing poker, and they actually had a guy in the team who was from the Bodog poker site that was implicated for looking at hole cards, and that's exactly what they were doing. It's the same thing. Like, if I were to go to their casino, they were to look at my cards, they were to take my money and then bet against me. And if it's not enough to, like, if they want to bet even more, then they just print more money and keep betting until I have no money anymore. That's like the equivalent of what they were doing. And in a regulated market, Sonic the Hedgehog founder is in jail for like insider trading for $20,000 or something like that, right? In the crypto market, like what they did is insider trading, and that is on the scale of billions. And the question is just like, okay, is that like, how much regulation is there? Like, is there any recourse? And my general thinking is that, yeah, like this kind of stuff does happen in certain places. It's just a question of proving it, right? So if I make an allegation against another firm, like a borrow lending desk that probably did something similar, they're always trying to hunt whales, right? They want to front large orders. And we were the largest trader on FTX. It's hard to get that through, though. In this case, it will go through because they have, in their bankruptcy and with their investigation, all of their internal chats, all of their trading records are coming up. And so it's just a matter, presuming they didn't like delete them, it is just a matter of time before everything comes up. And then you will just see, okay, like these are indeed the things that they were doing, right? So yeah, I mean, I agree with you. Like there's different levels of issues across the board. But I think if you look at FTX, The magnitude of the stuff they did is just like on a scale beyond anything else. It's wild.
But is that charge like at the end where they were, where they themselves were coming under pressure, and therefore your allegation is that then their practices became inappropriate? Because prior to that, everything was kind of just directional and going up.
I was highly critical of them from the beginning. Actually, I didn't even trade on the exchange for the first year and a half. Their first deck had this is like a direct quote. It was 15% risk-free interest loans that they were raising, and the last page said you can't lose money under U.S. law. That's like a direct quote. And it was absurd. Like there were several fraudulent points of this deck. We pointed it out to many people. Then they raised a token, and and it was to fill a hole on their balance sheet, and all this stuff. We were highly critical of them. But the problem was, over time, they became huge. They raised from pension, like Singapore Sovereign Wealth Fund. They raised from the biggest VCs in Silicon Valley. And there was a big, the final push was there was a crackdown on Chinese exchanges. So OKX and Huobi were the two biggest exchanges in China. There was a crackdown on Bitcoin in China, and we were the largest open interest on both of those exchanges. So when we had to move our business, we had to go somewhere, and we could have stuck to our guns and said, we're never trading on this venue, like we know their history, but we didn't. We just said, they've cleaned up their act. They raised from Sequoia. They raised from Temasek, from Ontario Teachers. Surely someone, I can't do the due diligence, but surely someone over there has seen their books, knows that there's a Chinese wall, knows that they don't take client funds, that they have separate, and they have good risk process. So surely someone has done all this work, and that was not the case. So yeah, for us, we took a risk, and we were trading on basically a fraudulent bucket shop that ended up, was printing coins, was doing all sorts of nasty things. Yeah.
Well, such is life. Listen,
Such is life.
People are like, yeah. Well, and so because I must let you go, but you guys, you did get high in your own supply. You just believed in the kind of perpetual thing. This was, you were we all make our own propaganda, yeah, but you were out there doing it. And that belief, because you don't see opportunities there in the now, obviously. But you still, if you go back and you read the tweets and stuff, do you just go, oh God, did I really say that? Or you're still
Okay, there are two discrete events that if they did not happen, we would still be around today. One of them is if Luna did not go to zero. If it went to 20 cents or 80 cents and got bought out, if it had a bailout, we would have been fine. There's a huge difference between something going down 80% and something going to zero. It just changes everything. And so if it went to 80 cents or let's say 20 cents on the dollar, or it became smaller, or if it just kept going because they reduced the supply distribution, we would not have had a credit squeeze at this time to that magnitude. Pulling $60 billion of market cap right out caused a huge ripple effect immediately. So that was one. Number two is FTX activities. Again, it could have been another exchange. If it were to happen on another exchange, we only traded on the big boys. I traded on probably 4 or 5 of the biggest exchanges, and that was it. I didn't really trade on the smaller ones. Yeah, if it was another big exchange that did the same thing, that would have been a problem. But in this case, it was kind of like a top 2 exchange. So again, if that didn't happen, we'd still be around too. I think that's but as you said, if you zoom out far enough and you say this is a credit bubble where there's going to be, bad actors that do all sorts of stuff, and you have to price that in as well, then yeah, if you have that wisdom and we had planned for that, then we could have been ready for even more events, I guess. And there are firms that are still around today that are still doing okay. But this really did take out a lot of people. It wasn't just us. There's several dozen firms that are going through bankruptcies.
I mean, what the ecosystem went. What did Bitcoin in its totality, the universe got to what, like $3 trillion? I think.
Yeah, even more. It's trading around 900 million market cap right now, and it's
That's 100 billion.
off like 3.5 billion. Or sorry, 3.5 trillion, something like that. Yeah.
Heavens! Wow. Okay. So we're reading, and we're gonna read stocks, manias, and crashes. Or whatever. You got to read Charles Kindleberger. Get a prepare yourself for when you get your next line of credit.
No more credit, only LP capital. We're not no more leverage.
I'm reformed. Give me another line.
Questions from the producer. Does anyone know who Satoshi Nakamoto is?
No.
Not even you or CZ or anyone in your group. Does anyone have a clue or guess?
Not from our era. No. The industry is like in a huge problem right now. There's been a massive, like the exchange space has got wiped out. There's one exchange that has 85% market share. The stablecoin space has been wiped out. There's one coin that has 85% market share. And so it's just the whole point of crypto is supposed to be decentralized and like choice. We don't have that anymore. Now we have like two choices or one choice in each of the main problems. And so the industry basically has a massive reckoning that's going to happen over the next like 2 years, and we have to see what comes out of it.
And is CZ the largest known holder of crypto in the world?
Okay, it depends how you count crypto, because he holds like, I don't know, maybe like 40% of the supply of BNB, but you can't sell that, right? Like that's not worth even close to what it is. In terms of owning like net worth, he is probably number one in terms of net worth because he owns Binance. Binance, the exchange, is probably worth $50 billion, something like that. And he probably owns 90% of it. So he, like on paper, is worth the most amount of money, and it throws off cash. But in terms of like who owns the most coin, there are other people. Like you've got the Tether guys. You know, Tether throws off $3 billion a year right now of revenue. All of the interest they earn.
And Tether is a bigger Ponzi than FTX, right?
Oh, they're not. Come on, they may or may not be fully backed, but they are. They're definitely. They're definitely the biggest players. It's like Brock Pierce. I actually, that would be a really good story. I don't know if you can get it because he's very, very quiet and probably won't do this. But he's the child star from like the 90s that then became one of the biggest Bitcoin holders early on, and had some controversy with sex kind of things. But he is like the secret shareholder behind so many big things in crypto. He's done some publicity. You can find it online. But yeah, there's a couple of these guys. Some of them are quiet. Some of them are louder. And they just silently own like $20+ billion of Bitcoin plus stablecoin. Yeah, there's several of them.
But do you do I mean, you could go conspiratorial in the sense that, you know, the system was designed to have a proliferation like choice, and now there's no choice. I mean, could you say that, like, because your great regret is that it went to zero, that Luna went down? I mean, history would suggest that was a very legitimate risk. But do you feel like someone would have been incentivized to push it over the edge?
Yes, very good conspiracy theory. So it was my belief is that and I have reasonable evidence for this, is that it was FTX again, because the way that the loans were done, they all went through their address and they were distributed through Genesis.
What would be FTX's incentive? Why would they want to take Luna down?
Okay, so there's two things. First, like Alameda is a prop trading firm. Like their goal is to make money, right? And the main question was like the tipping point. Where is the tipping point for this? If you have $500 million, that wasn't enough to do an attack. You needed more. And for them, Do, the founder of Luna, did something really kind of stupid. He started denominating the reserve. Instead of Luna, he put it a lot into Bitcoin. He's going to buy $10 billion worth of Bitcoin. Seems like a good idea. You would diversify the reserve, right? In practice, what this meant is he used UST, and he was buying Bitcoin with UST. And when he gave the UST to a large lending firm, Genesis, there were other players that then immediately borrowed that and immediately shorted. And yeah, you could have said, okay, those were hedgers or whatever, but it was just so well coordinated. And FTX, we know, was also printing tokens out of thin air to short even more, right? So we don't know if they specifically did it for UST, but it would be very likely that they did. So if $1 billion wasn't enough and they needed 2, why not just print the extra 1, right? And so yeah, like I'm of the belief that there was obviously the opportunity because the way the foundation dealt with their UST supply, but also there was a coordination, and there probably was some malfeasance in the way that was done. That's my guess.
But then you would be conspiring to your own kind of like your corporate death, because like you say, it was the evaporation of 60 yards of
So
value, but of money.
there's actually lots of ironies in this. The first irony would be that yes, if FTX attacked Luna, they actually lost, as they reported, $1 billion on Luna. So even though they may have made money shorting it, the way that their book worked is they were a bad market making firm. They just provided liquidity to the exchange so that the pricing would be good. But what that meant is they were just warehousing. And so as people sold and sold and sold, they would get longer and longer and longer, even if they started short, right? And so they would have made money, but then their risk model and parameters didn't account for the fact that things could go to zero. And so if you buy $1 billion at 10 cents, on the dollar, you can still lose $1 billion. It can still go to zero. And this kind of stuff, ultimately they lost $1 billion. So they reported on Luna, right? Also, it then constrained all the credit. And as they then, hunted us and others, that credit squeeze ultimately is what revealed the hole in their own book, right? Yeah. And I mean, that's like one great irony. Like another great irony is the CoinDesk article that revealed the Alameda balance sheet that showed that there was the hole, and then started the run on FTX, was by CoinDesk. CoinDesk is owned by DCG. DCG owns Genesis. When that credit hits, Genesis is revealed to have their own credit problems and is now trying to go through a restructuring or trying to stave off bankruptcy, right? So, like in a sense, like they also caused one part of the entity caused the hole in the other, or didn't cause, but started, catalyzed. And so, yeah, but for FTX, I totally agree. There was an impairment of judgment on many, many levels. They were not optimized in the way they thought they were to do well. Like, but we also know that they had huge holes on Alameda at the same time. So maybe they were just in so deep they didn't care. Maybe they just said, cowboys, like this is the Wild West. Who knows?
No, indeed, I don't think. I mean, I have no idea, but it does sound like one huge video game trip that just got a little bit like, what if I press this button? No, don't press that button. Boom, and and here we are.
Yep. I think Sam's. You have to find the video somewhere, but he at one point said, we didn't plan for those kind of scenarios. We just assumed that if that were to happen, then everything would be gone. And that is the mentality of a lot of people. Like, you don't plan for the 1% scenario.
Far away from that mentality.
I agree. Like, you don't plan for the 1% scenario. You're optimizing for up here. You're even okay if things are here, or even if they're down a lot. Even if they're down 80%, you're still okay. You're not okay with the 1% scenario. And the reality is, like, during a hugely correlated, like burst, that actually happens. And so,
Happens, yeah, it certainly does.
Yeah. Yeah.
And apparently Sam was speaking like on a link into the US yesterday.
Oh, yeah.
On one of the New York Times or something. And the like when he came on the screen, the audience were clapping. They're like, hey.
yeah, at the end, they applauded his honesty in
His
in
honesty.
his answer or whatever. Man, he's got quite the PR going on. He spent a lot of money on PR. His parents are like Stanford law professors. He's got this image of this, innocent or but the reality is like he's super coached. He's trying to now make the allegation or the narrative that it was negligence. It was not criminal intent. It was negligence. Like he didn't know that they were taking customer funds. He didn't know that like what the risk parameters were. Like, come on, man. Like, what do you mean? But just a month ago, you were telling everyone you were an MIT genius that could, do risk management, in your sleep. Like,
Oh, but I think I have to caution you, but because those in glass houses can't really be,
fair.
people, they could come after you on your kind of on your risk management, and so
Yeah, fair. But I'm not saying that either. I guess what I'm saying is like there's a lot of hypocritical image stuff going on right now. Not just them, by the way, like in other firms as well. But I'm like trying to be pretty transparent here. So
I appreciate that. But you can see that people, they get emotional, and they do come after you saying that you did have that intent, like that you were manipulating others. This is what they would say, and your response to that is, listen, I was in a credit bubble. I was, I guess, naive. You could say I was negligent in that I should have had a much more robust risk system. We should have brought down risk immediately on the event of Luna. That's my regret sheet that I have to live with. Whereas others will say, where does neglect become something that they want to chase you for malfeasance? That's going to be, unfortunately, like where you'll find yourselves for a little bit longer, I imagine.
yeah. We'll see. In 6 months, it happens, but yeah.
And is there anything else to go in the system to be taken out? Like all the dead bodies that have been revealed?
No, they haven't. There's at least a dozen firms I could name that are insolvent right now that haven't declared yet. And they're furthermore, there's an enormous amount of projects that require to raise money every 6 months, and those are going to have to go out. So there's like a whole graveyard coming over the next like 6 to 12 months, in my opinion. The FTX, like Luna maybe was the initial like spark, but the real like crescendo was FTX, because that is a huge credit event. And yeah, there's firms out there that are not going to be able to restructure, or that are walking around as zombie companies right now that haven't declared yet. All that stuff has to come out in the next 6 months.
What sustains them for 6 months? How do they keep up the pretense?
I don't know. I mean, as long as they've got cash they can spend, then they can try, right? But yeah, like this is just the reality. Like there's plenty of firms out there that are for sure insolvent right now. It's not a question. They're praying for the market to bounce. They're praying to be able to raise money. They're praying that, I don't know. They're praying for something, right? But there's quite a few coming.
So why did FTX, whatever, how could they not last another 6 months? Why was their judgment call now?
Because they had when CoinDesk revealed their balance sheet, it was a leaked balance sheet of Alameda, and showed the main thing it showed was not really the whole. It showed that the collateral that they were holding was all like really illiquid tokens, not Bitcoin, not Ethereum, but like FTT, Serum, like Maps, like these are the coins that Sam invented himself. This is what was so malicious about what Sam did. In order to borrow money, he invented tokens, and then he would sell out 3% of them, and then say, this token is now worth $6 billion. And so one of the tokens on his balance sheet was called Oxy, OXY. Does nothing. It's just like a random token. He had $2 billion of it, which he had posted as collateral and was using to borrow like $2 billion. Like, I mean, so he holds 97% or something like that of the supply. Or I don't know the exact percentages, but it was wild. And so when people saw that, they just said, okay, this is absurd. And Binance had bailed them out previously when they had another hole like a couple years ago, and they had a bunch of FTT token, and they said they were going to start selling. And as soon as that happened, the market lost confidence in FTT, which was the native token of FTX, and everything just imploded. All like FTT, then all the other small tokens that Sam had, and that's when their hole on their balance sheet just got enormous, and all their lenders recalled all the loans. That's when, now you see a $10 billion hole.
Wow. Black holes everywhere. I must let you go. Thank you.
Appreciate it. No, happy to chat again.
Okay, then. Okay. Thank you. Bye-bye. Bye.